Conversation there with the finance minister. On to corporate conversations then. SIS has recently acquired AP Securitas Private Limited. Now let's get the management of SIS and we'll take this conversation forward based on three important points. The first one, of course, being the synergies that the management sees from this acquisition. Now, whether this AP Securities acquisition will be a margin accretive one, and will the company up their mid-teens growth guidance for FY26? Now, these are the three important talking points where we base our conversation on. Dheeraj Singh, who is the CEO at SIS, joins in now to take this conversation forward. Dheeraj, good morning. Thank you for joining in. If you tell us more about this acquisition, first up, that you have made of AP Securities, how does that help you as a company in terms of synergies? And is this margin accretive to you immediately as it takes effect? Tell us more on that.
So this is a landmark acquisition for us. It is the largest security deal in India and for us also. AP Securitas is a 40-year-old company, currently run rating at about 110 crores per month, which adds to our SIS monthly run rate of about 1,200 crores. So combined now, we are run rating annualized basis of more than 15,000 crore, which had been our guidance, and hopefully this should be the largest incremental growth year ever.
Yes, I'm sorry, Mr. Singh, you said 15,000 crore rupees.
Yes, combined now we should be crossing this year in more than 15,000 crore.
You made revenues of 3,500 crore rupees last year. That number that you said was for the revenues?
Last year we made about 13,000 crore revenue.
Okay. All right, my bad. Yes, that's the quarterly number that I was talking about. I wanted to understand the margins overall for this acquisition. What would your margins look like once the consolidated picture comes in place?
So the deal is margin accretive, EPS accretive, and ROCE accretive. We have evaluated on that basis. Combined, we should expect a consolidation of about more than 50 crores EBITDA consolidation. And in terms of the EBITDA percentage margin, it should remain about the same. And in years following, that should increase further.
So what are the current margins for the acquired entity? If you can give us that particular number.
So the margins for this business is about, it should add about 50 crores or plus in terms of EBITDA. And we expect with the synergies that we have with the combined entity in terms of both the back-end side as well as on the client side, this will increase further in the years to come.
50 crores of EBITDA every month, Mr. Singh?
No, on a yearly basis.
On a yearly basis, okay. And what does this now do to your growth guidance for the year? You still maintain that mid-teens growth guidance that you had earlier projected?
Yes, we've been projecting 15% plus, and we are confident of that, probably a little higher for this year.
And since you say that this is margin accretive, do you believe that this 4.5% margins that you've been reporting over the last, say, 4 to 5 quarters, does that go into the high single digits, say, maybe if not this year, then maybe next year?
We are confident that we will achieve a 5.5-6% EBITDA margin for the group in a year's time. And this acquisition will work towards that also.
Mr. Singh, I wanted to understand, you said it will help you gain market share. What is the current market share that you have already? What kind of growth are you seeing, say, in 2 to 3 years for your own company?
So India market share for our security business is about 7 to 8% for the organized market. Typically, a market leader would have about 15 to 20% market share. So there's still a lot of room to play. And this particular acquisition will help us because AP Securitas is the number 6 in the industry for security industry. We are clearly the number 1. Now with the combined entity, our India business itself will be twice the size of our nearest competitor in security. Our India business will also become more than 10,000 crore, just the India business. I'm not talking about the international, and will contribute more than 75% EBITDA for the group. So it consolidates with our strategy. The AP Securitas is also very strong on the northern side of the market, which will help us to consolidate and achieve the density benefits for the northern market. They bring a lot of experience and skills in the e-surveillance market, which will combine with our alarms e-surveillance business. So there are many other synergies that we will work upon as the next 2-3 years.
Mr. Singh, two-part question here. You, in the press release, says it's an interim consideration of 73.5 crore rupees. Will there be more consideration which you will be paying? Plus, is it a profit-making company? Because for a revenues of around 1,100 crore rupees, 75 crore rupees seems like a good deal that you have maintained this time.
Yes, our deal criteria are very rigorous, and we believe we have a good win-win deal. We work on tranche basis, so it's a ratchet structure. We have acquired a majority as of now, and there'll be an earn-out over the next 3 years. And we hope the business does much better for the promoters to get a much better payout later.
So what are the contours of this deal? 73.5 crore rupees now. Will you have to pay more once there are certain targets received? Also, is this entity that you have acquired profit-making already?
Yes, it is a profit-making entity, and that is why it is both EBITDA accretive and EPS accretive, as well as ROCE accretive. But we have taken only a 51% stake as of now. The balance will be paid out in the final tranche after 3 years' time, and that will be based on the EBITDA that they achieve at that particular point of time. So it's a ratchet structure that they will be paid upon.
How much will you be paying as the balance, Mr. Singh, in 3 years' time?
Because it's a ratchet structure, there's no guarantee for the payment that they'll get in 3 years' time. It's linked by a formula to the EBITDA growth that they achieve. But it can be anywhere in the range of 200-300 crores to give you an estimate.
So you are saying from 50 crores currently that they have on an annual EBITDA levels, if they achieve 200 to 300 crore rupees, is when you'll have to pay more money to the company for the acquisition that you've made. Am I understanding that correct?
No, if they are growing at about 20% CAGR on the EBITDA, so if their 50 crores EBITDA grows to about 80 crores EBITDA, then we'll be paying them a multiple based on the EBITDA at that point of time, adjusted for, of course, the net debt at that point of time.
Okay, how much more will you have to pay, Mr. Singh, if that number is achieved?
Yes, if the numbers are achieved, then it can be anywhere between 200 to 300 crores in terms of equity payout.
And how much cash that you have in your books?
The current payout is all through the internal accruals and the NCDs that we've already raised. So our net debt equity EBITDA ratio is changing very minor from 0.7 to 0.9. And at that point of time, after 3 years, we will look at how to pay them out.
Okay, so there's not enough cash in the books to make the payment for the future for now.
Yeah, that's 3 years later. But as for the current tranche, we have enough cash in the books. And it'll be generated through internal accruals.
Right. So basically, as of now, for this tranche, you will not be raising any debt. But in case in future, if the need arises, your debt to equity goes up to 0.9 from 0.7 is what you mentioned, right?
Correct. Yes.
Right. So, and just one final question, Mr. Singh, what about your international business? Has that stabilized? Because the last time you spoke to us, you had mentioned that the government grants for the Singapore business were not received and that dented your international business. Has that come through? Part 1 and part 2 being the SIS Prosegur IPO approval that you had received from the regulator. When do we see that hitting the bourses?
Coming on the second part, the SIS Prosegur Cash, the IPO. We've got the approval, as I mentioned the last time, and we have a time frame window of about 12 months' time. So we expect to be listed hopefully before the April-May of next year.
All right, yeah, go ahead.
National business, yes. The margins are something that we are working upon. The revenues are strong and robust, one of the best revenue years, but the margins is where we are working upon.
Okay, all right. So we have a lot more questions. We're out of time today, Mr. Singh, but thank you so much for joining us and explaining the rationale of the investment or the acquisition that you've made. More importantly, they have to pay out more in case the acquired company achieves certain threshold as well in terms of EBITDA. For now, we'll move on and get in Nagaraj Shetty from